Guys. All right, Adam, just give me your assessment as you watch what is a increasingly headline-driven market.
Yeah, I mean, look, as you know, we think it's going to be choppy. I'm still optimistic that on the other side of this, we could get back toward, revenue growth and beneficiaries on the AI front with productivity and margin. So the call we've had is choppy here in the first few months. Then once the management teams understand what the policy backdrop is, they can, deploy productively capital. So I choppy first half, and then we probably get a resumption of pretty good growth.
Tom, you've tried to remain pretty optimistic through all of this. Are you still?
Yeah, I am optimistic. I can understand why investors are sitting on their hands. I mean, they don't really know how severe these tariffs are going to be, how long they are, but now we're seeing a big price correction, a decline in sentiment. And then something like today, we got a bad ADP jobs report, and the market's actually up. So we're actually rising on bad news, which is a good sign that a lot of bad news is priced in.
But do you agree with Adam that the first half of the year is likely to be a little more choppy, and that you can get through some of these issues here regarding trade, and then you look down the road to tax policy and think that, okay, well, that's going to usher in a better back half of the year?
In fact, what's just happened in the last
tax policy, excuse me.
Yeah, what happened in the last 6 weeks is essentially a bear market that has swept through sentiment and positioning, right? Because if you look at hedge fund positioning, it's gone almost neutral, and a huge correction in momentum. So I think it's very possible that March, April, May could actually be like one of these huge rally months where we're rallying 10, 15%.
Even in March. As we're sitting here, we're going to be driven, obviously, by more tariff headlines. We do have to consider the fact that earnings could take a hit. Do we need to reassess that?
Look, I think if stagflation were a stock, it's up off the low. That's why the market has been choppy. People are worried about, a slowing economy, Walmart, consumer confidence, retail sales looking a little light. At the same time, they're worried about, higher prices. I don't think that's ultimately what's going to happen.
So you'd be short that stock?
I would be. I just don't know. Maybe I think Tom is short it today, and I maybe would say it's I maybe would be short it in a couple months. But I think we're in the same mindset that we'll get on the other side of this at some point, probably in the second quarter. I just think it's hard to get through it until we really understand. If you're the CEO of a company that's a big company and you've got facilities and customers in Canada and Mexico and China, et cetera, I just think you're a little bit, I like his phrase, sitting on your hands a little till you understand a little bit more about how to most productively deploy capital. I think that usually takes probably through April earnings and guidance, and then I'd probably kind of be more optimistic that we have a certain path. So we're in the close enough for, government work, if that's a thing.
Well, you might be losing.
Yeah, exactly. We might get dosed.
I don't know if that's so bullish for you.
I'll take you too. I'll take you too.
It's one thing for CEOs to be a little skittish, be a little more cautious. That's what they get paid to do. Investors often have to place their bets before something takes place. Is this a buy, this unsettled market that we've witnessed recently?
Yes, in my mind, we put out a piece yesterday just talking about the 10 best days that happen every year. Last year, for instance, the 10 best days added up to 21 percentage points of the S&P. X those 10 days, the market was only up 4%. So, you don't get 20% years because it's good through the year. It's just the 10 best days. I think the setup for a 10 best day is near, because if the economy's near stall speed, I think people realize the Trump put does come back, because otherwise, it has to unwind all this austerity. And if the job market's soft, the Fed put comes back into play, because the Fed doesn't want to play with stall speed. And I think that's what is going to be the positive catalyst in the next couple of weeks. And on top of that, we already know stocks will bottom before bad news peaks. And so if we're seeing the market not fade on bad news, that means we're already priced in a lot of things that would scare us.